with Callahan's Corner. Got a submitted question. Gentleman wants to know what is the recommendations on how to structure fertilization services or individual services as a package. We currently have them as packages and service autopilot, but sometimes they run into problems. So my first thought would be is the foundational setup of the system, and are you accounting for budgeted time, your overhead recovery for break even, and the production or the cost of the material. So right now, going into 2022 here, we've got major issues where material prices are skyrocketing, our overheads going through the roof with employee wages. So we need to be able to quantify all that and build that into the system. So I'm going to show you how to build this out for any software that you put it into, but then I'm actually going to put that inside the software that we use, Service Autopilot. So hold tight. We're going to dive into how to set up a production rate based estimating system for production of fertilization, granular and liquid, how to include your overhead break even, and how to go in and add the cost of the increased product in there. So you have all the data at your fingertips. So good data in, good data out for reporting. So as usual, I'm going to pump open the screen here and show you how this is done. So the first thing that we're going to be doing here when I pop the screen open is we are going to be going into the SimpleGrowth blueprint. Now, the normal blueprint that everyone is used to looking at here is the normal blueprint here, but this is not where we're going to begin today. We want to go in and figure out our production, our actual material cost, and that's the biggest issue that everybody's dealing with right now in the fertilization industry. So we're going to go into the product cost tab here. So this is the same exact blueprint that we use for our SA setups and our deep dives. So we sit virtually knee to knee with folks for about 23 hours, setting this up and building this out. So I'm literally just going to lift the hood and show you how we do this. So if you want to do it yourself, here's the step-by-step directions to set up a professional production rate based estimating system that covers your overhead and the increased cost of materials, along with a budgeted time. So the first thing I'm going to do is go in and if we have a bag of pre-emergent and the bag cost is $20 and that bag covers, let's say, 15,000 square feet, or maybe this bag covers 12,000 square feet. The SimpleGrowth blueprint for product cost is going to go in and figure out what is our cost per 1,000 square feet based on the actual bag coverage on the label. Now, in addition, we may have a post-emergent selective herbicide that is going to be used for broadleaf and different weeds that come up. So that jug cost could be $270, and that coverage of that jug could be $711,000 or $711,000 of the jug coverage. That's a square foot coverage. So based on that, the cost per 1,000 would be 38 cents. But normally in this situation, we're not going to go out and do a blanket application. But if you are, that would be your cost per 1,000 for a blanket application. So you take the cost of the 1677. So actually, let's bump this up. So this is 15,000 square feet. So that's more realistic. So your pre-emergent here in the bag, bag's costing you 20. It's covering 15,000 square feet. Cost per 1,000 is $1.33. We've got post-emergent jug coverage with jug cost. If we were doing a blanket app, that would be 38 cents per 1,000. But traditionally, what we're looking at is when we're doing a IPM, integrated pest management, or a spot spray, what percentage of that 1,000 square feet are we actually going out and spraying? So in this instance, 0.3 would be 30%. So the actual spot spray coverage on average would be 11 cents per 1,000. So we take the 11 plus the $1.33. That's going to give us $1.44 cost for the materials. No markup or anything like that, but that's strictly our granular and our average cost of the spot spray through the IPM, integrated pest management. So what we're going to do is go in and take that cost and put the cost per 1,000 as 144. So it's going to cover my granular and my liquid spot spray on average. We're going to call this our pre-em app, or just maybe app number 1. We know that's pre-emergent. Our charge per hour in this company here is going to be, let's say, $85 per man hour for the fertilizing tech. And our expense per hour break even, let's say, is $42. So what we're going to do is go in and look at what is our base price, the lowest price to show up. So let's say that's $65 per application, and that covers up to, say, 6,000 square feet. And based on that, we've got a budgeted time of, let's say, a push spreader times 6 part of 1,000. So we've got 0.28 man hours. And our budgeted time here is going in and calculating the break even for our hourly expense plus the $1.44 times 6 parts of 1,000. So the sheet automatically calculates that, and it's going to be your blueprint to actually build out this service. So we're going to go in, and every 1,000 square feet over our base price of 6,000 is going to be an additional $5.50 per 1,000. And let's say anything over 6,000, we're going to use the production rate of a ride-on machine, like a Perma-Green Toro X-Mark. So we're going to go in and add that production rate in there. And then our budgeted cost is going to be our 0.02 times our break-even cost plus the cost of our materials break-even per 1,000 square feet. So we're charging $5.50. It's costing us $2.28. That's the profit that is left on app number 1. So what we're going to do is continue to build this matrices based on the 3 to 4 or 5 rounds that we have. So if we go back into our product cost template here, our feed and feed app, we may have a bag cost of, say, $26, and that bag is now covering 14,000 square feet. So you need to get that information off the bag, but it's now I've got $1.86, and we can do the post-emergent again as a spot spray of 30% and add the spot spray of 11%, covering up to 33% of each 1,000 square feet for post-emergent. So we'd have our 11 cents there, so it'd be $1.96. So we're going back into the blueprint of the SimpleGrowth blueprint, and we're going into app number 2. Now I'm going to do a couple apps here, and I'm going to show you how to do a price break per, all the way out to an acreage as well. And our custom field, just like the one above, it's going to be turf square footage. And we'd also put that up here. So once again, this is the SimpleGrowth blueprint that we use on the SA setups and deep dives, where we help people set this up and make sure it's correct. Now, most of this information here is going to be identical. So I'm just going to copy and paste this down, because our price per app is going to be identical. Our production should be identical as long as you're doing the same application. Now, our cost per 1,000 square feet for our product, back on the product tab, is the $1.86 plus the additional 11 cents, the spot spring of the post-emergent liquid application. And if you're using a ride-on machine, that is going to be probably done in the same pass. So there's no additional production time there. So we're going to put that at a $1.96 into the blueprint, and with any luck, we should be able to go in and drive that in. So you can see our profit percentage from app 1 to app 2 is a little bit different, but that's built in there. So we're going to build out all 5 or 6 rounds here and drive that into the system. So the other question is, Mike, how does it work if I do larger properties and I need a price break? And it's not a simple base price with an overage per 1,000. So what we do is we go into the SimpleGrowth blueprint that we use in these SA setups and deep dives and actually build it out here. So I'm just going to put this as app number 1. And then I'm going to show you how you can take all this data and put it into the software that you're using. I'm going to use Cervix Autopilot as an example. Any comments or questions, feel free to put them in the live view here too. So custom field, once again, is going to be turf square footage. And I'm going to say up to 6,000 square feet, just like the example we did with the overage. So just like our basic matrices, the base price is $65. So I'm going to go in and say it's $65. And I'm going in and doing a production rate conservatively of a push spreader for the first 6,000 square feet. Now, we've got our and we'll make this the same exact. So we've got $85 an hour, $42 break even, and a cost of the granular and liquid that we found from our cost tab, all the same. So I'm going to plug that into the price break model. And you can see the sheet starts pumping out our projected profit and profit percentage. So no matter the software you go into, the software really never tells you what your projected profit is and what it's going to be. So we want to be able to track that. And this is going to be our blueprint, kind of like building a house. We build the house with a blueprint, no randoms, windows and doors everywhere. Same thing when we're building in matrices. We want to build a foundational blueprint that tests the profitability in the assumptions we make. And then when that's ready, we put it in. Now, if you're using this blueprint, you have a tool that you can use year after year after year. You just update the price for the product, And this year, you know exactly what you need to put into the software. So I'm going to show you how to build that all out. But I want to take this step by step. Like I said, this is exactly the step we do with our SA setups and deep dives with consulting. But I want to lift the hood and just give you some value and show you how to do this if this is something you want to do yourself. So as we're looking at this, we may want to go in and say, okay, based on a couple of assumptions here, this is how we're going to pull out the math. So equals 65 divided by 6. How much were we charging per 1K? So right now on our base price, we're at $10.83. So maybe at that point, we're going for $6.50 per thousand. Now you need to base this on your price and your market and your projected profit. I'm going to use this as a basic example. So this is an idea that we can go in and actually add this in here. And we're going to just show you live how we actually do the actual calculations in this Google Sheet. So I'm going to go up to 10,000. I'm going to make my next price break here where we maybe go $6.25 per thousand. I'm dragging this down, and every thousand after my 10,000 now, I'm going to go up and increase that price by $6.25 per thousand. And as you can see, everything is driving in here. Now, we also want to drive in a production rate per 1K. So we're going to update that as well. So I'm going to go in and create a quick formula. So equals this here divided by 1,000. And times what our production rate is. And we're going to put a production rate in here as well. So I'm going to set this as a ride-on machine, about a minute per thousand. And plus. And once we have this in here, we can drag and drop this. But I want to make this pretty simple here for everybody involved. And that'll work. All right, so now that we have this here, that should be getting us our production rate. So let's just double check our assumption here. Let's just make this simple. All right, so we're going to go in and use our production rate here. 6, and then equals 7,000 divided by 1,000 for our parts of 1,000 times our industry average production rate for a ride-on machine. There we go. And now that we have it, we're going to throw some dollar signs around the M to hold that value for production rate. And we're just going to drive our production rate all the way down the sheet here. So that's going to tell us on average how long it should take. And this is going to be additional 0.02. So now we've got our production rates, and we've gone in and created a price break. So we're charging $10.83 per thousand for the base price. We've dropped that to $6.50 all the way up to 10,000 square feet. At 10,000, I'm breaking that down again. It's $6.25. Next price break that I'm probably going to make here would be about up to 15,000. And in that price break here, I'm going to want to go in and let's say we're down at $6 per thousand now. So once again, we're going to create that formula and drop some dollar signs in there to hold that value. And we're going to drive that $6 per thousand all the way out to 25,000 square feet, where we're going to give another price break here for probably $5.75. Now, obviously, some of this is somewhat fictitious, but I want to show you the methodology, how to build out a price break model with job costing, production rate, and overhead recovery. So we're going to go in and drive that formula again. And once again, I'm going to show you how to drive this into a software and bucket it into a package as well. I'm going to drive that all the way down here to an acre approximately. If we were doing this for a normal client, or you're doing it self, I would probably see a price break somewhere around 30 to 35,000, and then after an acreage or an acre overage. So we'd probably grab it somewhere right around 43,000. We'd get rid of that, and then we'd say every 1,000 square feet over 43,000 square feet is our last price break. So right now we're at 575. So maybe our price break now is $5.50 per thousand. Charging $5.50, it's costing us $2.28. So that's the model that you'd view a production rate based estimating system. And then you can watch your profit and profit percentage projected here as we go down. But this is the budgeted time in this area. This is your break-even cost with labor, overhead, and materials. So we can see our projected profit as we project this. Now, the cool thing is down the line, if we needed to raise our prices, or say our cost went up to $1.50, you can see this 1368 now has changed to 1404. So now you have a template that can be used year after year to create a predictable system, and that can be implemented in the software. So the next step is to go into Service Autopilot, and we're going to go in and go into the gear icon. So we need to build all the services and then pull them into a package. So I'll show you how that briefly, how that works, and then roll with that. So we're going to go into services. We're going to add a service, and we would do our app number 1. Pream, obviously to spell that out, but for example here live, we put a code in. Service mode is going to be per unit. Invoice description, income account is going to be fertilization most likely. So we've got everything we need. Service, taxable or non-taxable. Service mode, invoice description, account, and potentially class for the summer class. Estimate description, and the rate matrices is going into quantity rate times visits. We would make the custom field before this, so we have it be able to pull it in, and we would go in and grab our turf square footage. And then we would go in, and just like this model, if you want to break this larger, we would go in and add the additional lines. Now in this example, I'm just going to do 2-line matrices for the video just for the time's sake. We go into the SimpleGrowth blueprint, and app number 1 is 1 to 6,000 is $65. So it's literally just copying and pasting. $65, and then we're going to go in and grab the 0.28 and 2048. Break even. Every 1,000 square feet over the base price of 6,000 is $5.50 more, 0.02 hours. And your cost, labor, overhead, and materials for that round is going to be $2.28. What you're going to do is go in, hit save and new, and go out and build all 5 or 6 rounds. Or if you're in a price break model, you'd go to your SimpleGrowth blueprint for the price break and build this entirely out. So you projected your profit and profit percentage for each round. So once you have all of those in, the next step is to go in under the gear icon, and we're going to go to our master packages. So we build the custom field, we'll build the blueprint, check our assumptions, we build the custom field, we build the service and import the custom field with the formula, and then we go into a master package here and add that package. So if we went into these 5-step organic or 5-step fertilization program, what we would do is labeling the application, pulling in the service, and creating a start and end date that's desired. Minimum days between is the minimum amount of days that you can have in between rounds. So in this instance, it's 14 days. And once that's set up, we've got that in there. Year after year, you need to renew the package so everything loads, and you reset the default start and end dates. So you become separate waiting list jobs that come into the package. So the desired start date and the desired end date, the minimum days before you can go to the next application. And you need to set your renewal date. So once that's all in play, you are ready to go. So what would happen as your end result, we would go in and add a lead when someone calls your office for an estimate. We're going to go in and put their first name and last name in the system. We are going to grab their property address. And their postal code. That's automatically filling in the billing address now. We're going to confirm the city, sales tax code if it's appropriate. And we would put their email in. And their phone number in the cell phone field. Next thing we want to look is under the details tab. We want to know the account type, commercial or residential for reporting, and sales source. How did they hear about us? They heard about us from an Everydoor direct mailing with lawn copy and saves. Now we've got all the foundational pieces. We're going to continue on. That is not a duplicate in this test account. And we're going to go to the More tab, property measurements, and base it on that 1 to 6,000 square footage. So we've got a different example in here, but I'm going to show you how all this data pulls together quickly. So we're going to go in satellite imagery. We're going to click right in the software service Autopilot. And this is what we test and train on a daily basis and help people set this up for them as a turnkey process. This is literally how you do it if you're doing it yourself. So we click here, and we're going to color that in. Label it turf area. Hit save. So every time we pull that up, it works. And we're going to go into our turf square footage. Hit save. That's updated. Now it's time to actually create an estimate. So now that we've got all that data in from the blueprint, we've built the custom fields, the services with the matrices, and drove them into a master package. We would have that inside a template that would automatically load. And we'd go in, grab our appropriate template. And let's see if I can grab one here. Our test account. And all our examples are going to load in. And if I had saved this to the appropriate custom field, that 8,500 square feet would have automatically loaded in with the price per app, budgeted time, cost before profit, including overhead, labor, and materials. And you can see in this example, our grub control app can have a higher price if that's applicable with a different application budgeted time based on the way we're applying it. So that's how it all loads in. And then these selected start and end date ranges would be the time you'd go out and dispatch that. So hopefully that's helpful. Main thing is go into a blueprint, just like the SimpleGrowth blueprint. You create your model for a large price break model with profit and profit percentage built in with the break-even cost of materials, just as we figured out in the product cost tab for our granular and our liquid coverage, whether it was blank or spot spray. And if it is a simple matrices, we set our base price to show up. What's the maximum area we cover, budgeted time and cost before profit based on that product cost from the tab, and then our overages. So that's how you would set it up, set your services, drive them to a master package, create desired start and end dates, and then go in and figure out your product costs and incorporate that in. So it's a 3 to 4 step process, but once you have that blueprint that you build or use a SimpleGrowth blueprint, that's a tool that you can use year after year to update your product costs. So any of the people that have done an essay setup or deep dive are using that blueprint that we let them keep just to update the product costs. And the sheet spits out the exact numbers you need to put in the matrices in essay or any other software. And it's a turnkey solution. So hopefully that was answering the question of how do we set up fertilization rounds and services. We'll see you again, Callahan's Corner. You ask the questions, we answer them live right here on Facebook.